Indiana Property and Casualty Insurance Exam, arbitration. Settling a dispute by agreeing to accept the decision of an impartial outsider. Examination of your books and records. The company may examine and audit the insured's books any time during the policy coverage and for up to 3 years after coverage expires. Actual cash value. Replacement cost minus depreciation. Medical malpractice. Designed to protect people who work in the healthcare industry such as doctors, surgeons, dentists, nurses, hospitals, opticians, pharmacists, etc. Particular risks. Particular risks occur when there is some sort of loss to the individual specifically. Personal effects floater, PEF. Used to insure the insured's personal property that is taken with on trips and vacations, and are insured everywhere in the world except while at the home of the insured. Fidelity bonds. Offer protection against the dishonest and fraudulent acts of employees, therefore, they guarantee honesty. Comprehensive personal liability, CPL. Coverage which pays for bodily injury and property damage of others caused by the negligence of an insured which is unrelated to business activities of negligence arising out of use by the insured of an automobile. Personal lines contracts. Offer protection against property loss owned by individuals for real and personal property not used for business or commercial purposes. Combined single limit. Combined single limit is a total policy limit which is expressed in the declarations as a single dollar amount that will be paid for both bodily injury, including death, and property damage, regardless of the number of victims, in a single accident. Commercial blanket bond. The bond limit is the maximum amount that will be paid for a single loss regardless of the number or employees involved. Indirect, or consequential, loss. Indirect, or consequential, loss is damage which results from a covered peril, but the loss itself was not directly caused by that peril. These are losses which result from the actual physical loss itself and are generally only covered if an appropriate endorsement was added to the policy for such loss. Personal injury, P.I. Injury other than bodily injury, it is non-physical injury, or property damage arising. Permanent total disability. The employee can never work again, making this the most severe disability and awarding the highest compensation. Depreciation. A decrease or loss in value. Pure risk. A risk that presents the chance of loss but no opportunity for gain. Bill of lading. A shipping contract that contains all shipping information between the consignor, person sending the goods, of the goods, carrier and consignee. Coverage D. Uninsured boaters. An insured is paid damages upon bodily injury caused by an uninsured operator or a watercraft, inside the premise robbery or safe burglary of other property. The insured or any of the insured's partners or members or any employee while having care and custody of property inside the premises, excluding any person while acting as a watch person or janitor. Fair rental value. Pays the fair rental value to any part of the premises rented to another minus any expenses that do not continue while the premises are not fit to live in. Exclusions. Exclusions limit the scope of coverage in an insurance contract by specifically listing any causes of loss for which coverage will not exist. Aggregate limit. The aggregate limit is the limit the policy will pay for all covered loss in a policy period regardless of the total number of claims brought by any number of claimants. The aggregate limit resets to the original amount on the anniversary of the policy. Farm property coverage form. is used to insure farms on a commercial basis that are owned and occupied by the insured. Mortgage clause. The mortgagee, lender, will be paid under Coverage A and Coverage B as their interest appears. If required to do so and with notice by the company, the mortgagee has 60 days to file a proof of loss. Contributory negligence. The person who is pursuing a claim could not hold liable the other party if it was ruled that the claimant, through a failure, omission, or negligence of their own, had partly contributed to their own injury, in any degree, no matter how small. Conditions. The conditions of a policy set forth and describes the rights and duties of both the insurance company and the insured. Fundamental risks. Fundamental risks are generally large-scale, impersonal events that are caused by groups and/or natural occurrences and have great effect on groups of people, sometimes even the entire populace. Common examples of fundamental risks are unemployment, war, political instability, and natural disasters such as floods, earthquakes, tidal waves, and hurricanes. Insurable interest. An insured must prove to an insurance company that they have a legitimate interest in preserving the property they seek to insure at both the time the coverage is purchased as well as when loss may occur in the future. Notice of claim. A provision that spells out an insured's duty to provide the insurer with reasonable notice in the event of a loss. Builder's risk, BR. Policies will pay for direct physical loss of or damage to covered property at the premises described in the declarations caused by or resulting from any covered cause of loss while a building is under construction or being renovated. Common carriers. Anyone with goods to ship can hire companies for that purpose. Personal liability. An individual is liable for injury to another, or to their property, from both intentional acts and negligence. Binders. A binder is temporary coverage which allows that coverage to be put in force by agents who have a binding authority from an insurance company. A binder is the acknowledgement that immediate coverage is in effect pending the future issuance of a policy. Other insurance. The other insurance, aka pro rata liability, clause offers a formula, based on the concept of pro rata liability when coverage by more than one company is in effect on the same property at the time of a loss. Coverage B watercraft liability. Covers bodily injury and property damage liability created by an insured's use and operation of the boat. Liberalization clause. If an insurer broadens coverage to an existing policy addition, then all insureds having that original addition, located within a state within 60 days of the broadening, are entitled to this coverage at no extra cost. National Flood Program. Any community that promises to enforce land control measures, which are designed to develop future land projects away from flood-prone areas, is eligible. The Insuring Agreement, Insuring Clause, Insurance Provision is the portion of the insurance policy in which the insurer promises to make payment to or on behalf of the insured. It states the scope and limits of coverage. The insuring agreement is usually contained in a coverage form from which a policy is constructed. In other words, it is the insurance company saying, "We insure to insure you under these conditions for this amount." Speculative risk. A situation in which either profit or loss is possible. State Guarantee Association is established by each state to support insurers and protect consumers in the case of insurer insolvency. Guarantee associations are funded by insurers through assessments. All authorized insurers are legally required to participate in the State Guarantee Association for any state they are authorized to do business in, regardless of where their corporate office is. Cyber risk insurance protects a commercial concern for the expenses associated with data breach, including court-instituted compensation to customers and legal fees. Material fact. A material fact is a statement that would have changed the underwriting basis of a policy, had the company known of the material fact at the time of underwriting, and the offer made would have varied from the offer originally presented. Adverse selection is selection against the company. Tendency of less favorable insurance risks to seek or continue insurance to a greater extent than others. Also, tendency of policy owners to take advantage of favorable options in insurance contracts. Inside the premises. Theft of money and securities, the insuring agreement in the commercial crime form that covers theft. Mysterious disappearance, MD. Insurance agreement, when purchased optionally by endorsement, will cover the loss of property when its disappearance is unexplained. Excess liability. A large extra amount of coverage. Civil authority prohibits use. Additional living expenses and fair rental value are covered for up to 2 weeks if the prohibited use of the insured residence was the result of direct damage to neighboring premises by a covered peril. Morale hazard. Is hazard arising from indifference to loss because of the existence of insurance. Claims made form. A new coverage trigger and policy form of coverage in the 1980s. Bond penalty. The face amount, or limit, of a surety bond. Ocean marine. Used when covered property is traveling or located upon water. Discovery period. The length of a time the employer has to realize that they suffered a loss at the hands of a dishonest employee and to make a claim that will be payable. General damages. Are subjective or very personal and are compensation for the injured party's pain and suffering. Additional insured. Additional insured is a third party who is usually added to a commercial policy because they also have loss potential. Direct loss. A financial loss that results from the physical damage, destruction, or theft of the property. Interline endorsements. Those that could apply, or do apply, to more than one coverage part of a CPP. Directors and officers, DNO. Protects individuals that serve as officers and board of director members for organization including for-profit businesses and non-for-profit concerns. Market value. Market value is the price at which property will sell in the regular marketplace when neither the seller nor the buyer is forced to terms. Unusual about market value is the concept that the land value is included in the price of a home. No other valuation method includes land value in an insurance contract. Law of large numbers. A principle stating that the larger the number of similar exposure units considered, the more closely the losses reported will equal the underlying probability of loss. Employment practices liability, EPLI. Provides protection for an employer against claims made by employees, former employees, or potential employees covering discrimination, age, sex, race, disability, etc., wrongful termination of officers. Errors and omissions, ENO. Protects the insured from liability that arises from their negligent acts in the marketplace they serve when making mistakes, errors. Blanket limit. Blanket limit policies cover multiple locations simultaneously under a single policy with one limit that applies to all locations and all business personal property at all the insured locations. Consent to settle a loss settlement provisions. Some forms of professional liability insurance include the consent to settle a loss clause, which requires the written permission of the insured before an insurance company can make a settlement with a third-party claimant. This requirement serves to protect the insured's reputation. Industrial insurer. Insurance is also sold through a special branch of the industry known as home service or debit insurers. These companies specialize in a particular type of insurance called industrial insurance, which is characterized by relatively small face amounts, usually $1,000 to $2,000, with premiums paid weekly. Fair Credit Reporting Act. This federal law helps ensure that credit information used with applicants for insurance are treated in a fair, accurate, and confidential manner. The Act says that reports can only be furnished for certain purposes, and one of those purposes is for underwriting insurance. Functional replacement cost. The actual amount spent to repair or replace loss to the structure using common construction materials or their equivalents. No fancy or ultra-expensive replacement parts will be used matching those that may have been part of the loss, just commonly available building materials. Mortgagee rights. This provision gives special protection for the interest of a mortgagee when a loan is made. The mortgagee is the lender and the mortgager is the borrower under the terms of a loan transaction. A mortgagee has a financial interest in mortgaged property and is entitled to contract rights under the property policy bought by the mortgager covering the mortgaged property. Consideration. Something of value exchanged for something else of value. Department of Housing and Urban Development, HUD. Established a federally subsidized flood insurance program which made flood insurance available to business and individuals. Personal Articles Floater, PAF. Covers scheduled property anywhere in the world on an open perils basis. National Flood Insurance Reform Act of 1994. Strengthened compliance requirements for lenders. All property in special flood hazard areas requires the purchase of flood insurance when a lender is making a loan, increasing a loan, extending it or renewing. Business personal property. Covers personal property, items not land or affixed to land, and includes the contents of the insured building. Coinsurance/insurance to value. The coinsurance or insurance to value clause is found in a replacement cost policy, and it requires the insured to have in force a minimum specified amount of the replacement cost value, expressed as a percentage, usually an 80% minimum, of the insured property in order for partial loss claims to be paid in full. The clause does not apply to total loss claims, only to partial loss situations. Hospital professional liability insurance. Covers damages arising out of medical incidents from most professional services rendered to patients in a hospital by medical personnel and staff in the hospital. Motor truck merchandise floater. Covers the truck's liability for the goods which are being transported. Appraisal. The appraisal clause of a property contract is a condition in the property policy that addresses a situation in which the insured and the insurer cannot agree on the value, amount, of the loss. Occurrence. Occurrence is a broad concept of a liability policy that includes payment for loss caused by either an accident or a continuous or repeated exposure to conditions over time that results in injury or loss. Reinstatement. Is the act of putting a lapsed policy back in force by producing satisfactory evidence of insurability and paying any past due premiums required. Most states have reinstatement laws requiring an insurer to allow for a policy to be reinstated upon request of the policy owner within a specified period of time. Concealment. Concealment is the failure of an applicant for insurance to disclose any known fact of material importance. Material information is being hidden by the applicant. Emergency program. Eligible if a community has agreed to adopt the controls that are specified by FEMA. Indemnity. All property and casualty insurance contracts are contracts of indemnity, and their purpose is to make the insured whole again financially, to reimburse the loss while not making the insured better off than they were prior to the loss. Owner's goods on owner's truck. Must be purchased when the owner of the shipped goods owns the truck the merchandise is shipped in. Absolute liability. Exists when a person subjects another party to a dangerous or hazardous condition present on their property, including the idea of harboring a wild animal on the premises. When a victim is hurt in an absolute liability situation, they do not have to establish negligence to collect money damages. Coverage: a covered property. Loss is covered for direct and accidental loss to any boat, motor or trailer described in the declarations plus accessories. Commercial general liability. Protects businesses against loss caused by the negligence arising out of the firm's business activities. Moral hazard. Is the effect of personal reputation, character, associates, personal living habits, financial responsibility, and environment, as distinguished from physical health, upon an individual's general insurability. Proof of loss. A sworn statement that must usually be furnished by the insured to an insurer before any loss under a policy can be paid. Permanent partial disability. A permanent injury occurs for which a scheduled payment is made, and the worker can return to work. Comparative negligence. The injured party can only collect a percentage of a court award based on the total responsibility of the tortfeasor in the injury. Commercial building and business personal property form. This form is utilized to write protection to cover direct physical loss in three areas of a firm's real and personal property as well as that of bailment property, and is often an integral part of a CCP contract. Extra expense. Provides coverage for businesses that cannot endure a complete shutdown even for a brief time. Broad form perils. Offer coverage on all of the 13 perils included in the SFP while creating and adding a new set of 9 perils. National Association of Insurance Commissioners, NAIC, is an association of all of the state insurance commissioners active in insurance regulatory problems and informing and recommending model legislation and requirements. The NAIC does not directly make laws, as laws are made at the state level. They do work on suggesting standards for states to adopt with the goal of standardizing the insurance industry throughout the United States of America. Landlord's furnishings. This benefit is for the insured as a landlord for premises which are rented to others on the resident's premises for loss due to a covered peril. Commercial lines policies. Focus on protection against property loss of real and business personal property that are utilized for business uses. Doctrine of concurrent causation. Generally, states that if two perils cause loss simultaneously and one of the perils is covered and the other is not, then the policy must pay the loss. Expediting expenses. If the insured calls in the repair person if a problem is suspected, the insurer will gladly pay the bill to prevent a potential larger loss. Coverage: see medical expense. Pays all necessary medical expense up to 3 years from the accident date. Multi-line contract. Combines property and liability, casualty, coverages in a single policy. Children, attractive nuisance doctrine. Is a situation which draws the attention and possible injury of a child.